All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Let's go out and do the 30-day challenge summation. But before we do that, let's take care of what we need to do for this challenge. We have cash for another signal, but there are no new signals on the board. In fact, the only crossover action that we're seeing is downside crossover action on J&J. Outside of that, we're not seeing any crossover action, here in play. And so we have one position on the board and cash. Now it's CSX. And CSX struggling here today, breaking below yesterday's lows. Here is it's kind of broken out into a new short-term high. Struggling just a little bit here on the day. Let me pull it up here. So the mark here on it is 290 for CSX. And I'm debating pulling it off just for the 30-day challenge summary here. And I'm just waiting for the heads up that everything's functioning correctly. Hold on one second. My apologies there. Okay. All right. Got the thumbs up here. All right. So I'm going to take off CSX here. And this is just to kind of put a bow on the 30-day summary, but also here because I want to, get the allocations, the dollar allocations, correct as we go forward here with it. So I'm just going to pop this off. 287 is my fill price. Again, if you hold it, with everything, it's not going to make or break the challenge, but I am out of CSX here, and in moving on here from it. So small gain, $300 gain there for it, but out of CSX. Let me make sure the alert goes out. I am told that the issue with the text alerts has been found and fixed, and should be good to go. The alerts may look just a little bit different. It won't say 100K challenge, but you'll still see the alerts come through with all the pertinent information there. Okay. All right. So anyway, that leaves challenge here at 32.20 and in all cash, and often waiting for the next signals. Okay. So let's take a look at this challenge so far over a 30-day period, and compare it to not only last challenge but the expected run rates here. And you'll notice on the spreadsheet, there's a tab down here below that says 30 and 60-day summary. Okay, and this is where I'm putting in the data, and you can access the data here on this. So let's kind of fill some of this out. And let's start over here with the challenge ending probabilities. And you've heard me talk about this before, but what I expect from a challenge, right? I don't expect that every challenge is going to 100K. I don't expect that every challenge is going to just be sunshine and roses. There's just going to be slogs. There's going to be grinds. There's going to be, that type of element in every single challenge. And when you're dealing with something that's algorithm based, it's very difficult to take any of that out and still have some upside, right? But going to zero, right? How many challenges do I expect to go to zero? Well, I expect 10% of the challenges that we run here at Trader Minute to go to zero. That's my expectation, that we will see 10% go to zero. Now, zero means below 3,000 to me, right? When I look and I say, okay, you know what, challenge, zero is do nothing, right? Then it could go to 1,500, from 3,000 to 1,500, from 3,000 to 500, from 3,000 to 2,900. And that is in that 10% area of expectations based on what is coming up on now 4 years worth of 4 years of data and testing here. Challenges to go from 3K to 100K, my expectation is about 20% of the challenges will go to this, in between this mark. Okay. The 10 to 20K, this is where, most challenges are going to go. 50% chance of going into that area. We saw it last challenge. That's kind of where we lie, where we went to, right? And then 20K or above. And this is the category where I kind of look and say, hey, the chase to 100K, right? It's just not going to happen every challenge. It will happen, from time to time. And when it does, it's going to be, fantastic. But that's what I'm looking at, based on the way the algorithm's put together, based on the ATR method and how things kind of tend to move. These are my challenge ending, expectations, based on the data that we have. And some of these can be altered, very easily by one or two trades. It's one of those where, it's not that sensitive, on a day-to-day basis, but you can have a big trade, really pay off, and all of a sudden, okay, the chase is on, and a lot of times it's going to be a grind, into this 3 to 10K area. You get a couple decent trades. Okay, 10 to 20K is a really easy area to be at. But to get up above that, you need a few, you need the ball rolling a little bit, and you need the market to, kind of, not flatten out or chop, too much here. So anyway, those are my expectations, right? Those are my expectations, and those are the probabilities I expect that we will see play out over time, and you'll continue to hear me, show those and talk about those in terms of the 100K challenge. Okay, now let's take a look at this challenge and compare it to the May challenge, right? And then we'll compare that to the what I expect based on the data, right? So the May challenge, how many trades were made 30 days in, 30 trading days in? In the May challenge, it was 10. In this September challenge, it's been now 7. Okay, expected 10 to 12. All right, so this September challenge, we're a little lower on trades. Okay? May challenge, percent of trades that hit initial target were 50%. Okay, 50% of them hit their initial target, so 5 out of 10. This challenge, 14%. We only had Micron hit its initial target, just one. Expected here, 58%. Percentage of trades stopped out, right? Well, it's going to be 50%, here, and it's going to be 86% here. Now, these are time stops or price stops. Mostly in the May challenge, it was time stops that knocked things out. We have had 3 price stops knock things out here this challenge so far, and that when I talk about the rhythm of the challenge, we'll talk about that. But expect 42%. So we're running really high on stops out, and not in a good spot. In fact, an area where I would expect the challenge to be somewhere around 1,200 to 1,400, if we were lucky. And it's just not a good number here at all. Market gain or loss. What's really interesting between the 30 days here, the 30 days so far, this challenge and last challenge, is the market gains are almost identical. 3%, is what the market is up. There is no expected there, right? The challenge is expected to, perform, regardless of the overall market performance. But it is one of those where the May versus September, very comparable here. Calls versus puts. In May, it was all calls. Right now, it's all calls, right? As far as expected here, it depends on market conditions, and I would expect it to be all calls right now. Maybe a put or two, but not too often are we going to see puts in this type of environment with the way the algorithm is tweaked. Now, signals not traded. In May, we had 6. So we had 16 signals come in the first 30 days. We were able to trade 10 of them. But 6 of them we weren't able to trade due to not having the cash, or the options being price funky, or something of that nature here. Here in the September challenge, we've had 22. We have had 29 signals come in, and we've been able to trade 7, but 22 have been untraded. You can see the number of signals. 29 this challenge in the first 30 days, 16 in the May challenge in the first 30 days. And that's a lot. That's a lot. This is more than what I expect to see, the 29. I expect to see somewhere around the 22 to 24 area based on the stocks on the watch list. But it's not, anything that's, abnormal or something we haven't seen in the data. So, nothing that, requires any kind of adjustments or anything. Now, manual adjustments. Now, these are times where I stepped in and I did something different than what the challenge algorithm dictated in terms of, pulling a trade off. Last challenge, we saw 4 manual adjustments, right? They happened, here, I'll show them to you. Let's see here if I can get my my tool up here to mark on the screen. Get it off of there. But we had a few trades. Procter & Gamble, JD, they both ran as the algorithm dictated. Johnson & Johnson as well, and then we had GLD. Now GLD went up and hit its price target right away. We adjusted the trade, pulled some out, and and added some more. And then the next day it shot up. And instead of rolling it, adding some more, what did I do? I pulled it all off. Okay. In fact, I'm sorry, bad memory here. GLD, just did the initial pulled off the 40%. So we had 7 contracts, pulled off 3, ran with 4. The next day it popped, and I just pulled the 4 off, and I didn't add to them. I didn't, adjust the option. I didn't continue with the trade and readjust the stock exit levels and profit levels and all of that. So, manually won right here with GLD. Okay. And then with Under Armour, Disney, and Visa, these were all manual exits. We hit 10K on the challenge, and that's time to pull the 3K out, and so that's what we did. And so I just manually exited all of these, ignored the auto exit dates and the time stops and all of that, pulled the gains off of those, and kind of hit the reset button here for them. So they were all risk off. They were all pulling things off, which is what you're going to see. Almost every manual adjustment is going to be pulling something off. In this challenge here, we have had 2 manual adjustments. One of them here with Micron, and that was just pulling a little bit of the trade off, pulling 2 contracts off ahead of the Intel earnings, right? Just from a risk management standpoint, and then CSX, me just pulling CSX off right now. And so those are the 2 manual adjustments. And so you'll notice all 6 manual adjustments that have been made in the first 30 days here, these are all kind of risk off scenarios rather than risk on scenarios. And you can make a good argument that every time I've made a manual adjustment, it has been a negative for the challenge, meaning it has hurt the profitability of the challenge. If you look at all 4 of them, all 6 of them, CSX, we'll see. We'll see how that plays out. But 5 of them so far, it has hurt the productivity of the challenge. But again, it was about the risk management with them, or the situation with them, and I'll continue to do that from time to time, as needed here. Okay. Now, there's a big difference between the May challenge and the September challenge in that the ATR method for the September challenge is 6 days versus 5 days. What do I mean? Well, this element of closing out a green trade or a trade that's working, instead of doing 5 days without hitting its target and then pulling it off, we're doing 6 days, right? Now, this is something that we talked about at the beginning of this challenge and how it would kind of play out. And I talked about the fact that we're going to see more trades be more profitable using the 5-day, right? We're going to have more trades actually, have their gains. Using the 6-day, we're going to give back some of the gain or some of the percentage of trades that work, but our total gains over time should be better, right? And that's what we see in the data. We see that the total gains over time are going to be better, but individual trades, not as much. The percentage is not as great, and the reason is that we tend to get a big hit, kind of a little bit more of a home run, a little bit more of an outlier there with it. Now, this challenge, the only trade that was affected by that was Netflix. And had we done 5 days versus 6 days, we'd be up an extra about $800 on Netflix, right? It'd be where the challenge is sitting at around 4,000. Right, so that's the only difference there with it, nothing that I'm going to adjust or change right here. We'll see kind of how it all plays out, in with the challenges. It is something that I may adjust back, further, in challenges to come. I don't think it's a huge, game changer, when I look at all the data, but it is it is something where had we gotten out of Netflix, we'd have been able to go out and trade IBM. It just kind of keeps some of the trade rhythm going. And that is where this challenge to me differs dramatically from the May challenge so far. There's zero trade rhythm in this challenge so far. It is just it has been one where from trade one, we go in, get into Home Depot and Intel, and boom, we get some bad news for the overall market. It drops both stocks aggressively, puts them at their stops. We get dinged out of them. The stocks ultimately turned around and went to new highs. But that news really kind of crumbled them. Then Walmart and Microsoft, both of these just, great signals, and both have gone to new highs. But, in the time frame that we were in the trade, they just went nowhere, just absolutely nowhere. And then, even a Micron, right? We get into Micron, and boom, first thing we get is, Micron drops. And it's like, okay, come on. Come on, let's go. Ultimately we got a little bit of pop. We were able to pull some off, but then got an aggressive dip that really kind of ate into our gains there with it. So no real fun there. And then Netflix, which just all the promise in the world, great signal. All right, ready to go. Nice little continuation pattern. We survived the pullback. Let's go. And then the analyst steps in and kills it. Right, the analyst steps in, says, our subscriber numbers are running lower than what's expected, and blah blah blah. And okay, we're going to see the stock, return to consolidation with that type of news. And so, ultimately we pulled a gain on it, but, on Micron and Netflix, but, and even CSX, we're 50 cents from the price target. And here we go, track back. And, we end up with a gain and, a $300 gain on an $800 trade. It's, not too terrible, but, it's not going to make the challenge, right? But we did have one period of the challenge where, and it was shortly after the Micron trade, where the challenge was down to $1,300. And, it's gone back up to $3,200. And so one of the things that we have seen is after this very sluggish start, right? And we can look at Micron and Netflix and CSX and I can go, man, come on, these things, come on, go. But, even without them going, they've been good enough to really put us back into the game. And with some absolutely abysmal statistics in terms of hitting the targets, in terms of getting stopped out, with just some terrible stats, we have a challenge that is slightly green, which is pretty amazing, and something that we have seen in the data, and one of the reasons why we set it up, in the way that it is currently set up, is simply because it just it takes a lot of negative to erase one positive. And it only takes one or two positives to erase a lot of negative. But again, it's one of those where the challenge has had zero rhythm to it here so far. Would love to see some of that rhythm come in and be able to stack 3, 4, 5 trades on the board, in the green. We saw that last challenge where we were able to stack 4 trades in a row, right? 4 trades in a row hitting a target, and boom, we were from 3,000 to 10,000 like that. And given what the percentages have been so far, just to get back to the normal run rate, we're due. We're due at least 2 or 3 in a row, here in our favor, and so we'll go after them as they signal. Now, what I don't have yet is all the data on the various triggers that have signaled and how they have played out. I know it's been mostly very bullish. In fact, some of these, I've made some really nice runs. Others have gotten stopped out, like a Disney, for example, there. But there are others in here that have made some beautiful runs after their signal, like a Vale, and we'll have that data here, and we'll make that available in the coming weeks and months. But for now, just have the data on the trades that we are making and running with here. Okay, time. Right, there's always a time cost when it comes to trades, and a theta cost. If we calculate and add the theta up here, we're looking at about $800 is what time has cost us. Right, so that's just a natural element, and it's a normal element to option trading. There's always that cost of time, and that is about $800 here. So it has been pricey, but nothing that has been unusual. That's about what I expect, with this number of trades over this period of time. Okay. All right. So challenge after 30 days here sits in all cash, waiting for the next signal. Again, the stats, there's just no way for me to sugarcoat them. They're ugly. They're absolutely ugly. They're running well below the expected, and we'll been able to survive through it, and hopefully we get the stats starting to push back towards their run rate, and we can really look to thrive, as that happens. Thanks for hopping on. Thanks for being with us here at Trader Minute. Have yourselves a fantastic day, and we'll talk to you this afternoon. Take care.